Selling is the hardest part of investing in crypto, the most difficult skill and psychologically tormenting. If you think buying is hard, and have somehow messed up the buy part of this bear market, then you are so far from thinking you have the right to think you'll nail the sell part of the bull. But that's where myself and this video come in. I hope by the end I can provide insight on how it is I plan to sell the tops of these coins, and that you can go on to apply these strategies to the crypto you hold. In this video I will give a general overview of all the skills needed, and I will be using different crypto as examples. But what I plan to do after is make individual videos for each of the significant tokens. Just short videos, perhaps 5 minutes at the maximum, to give my literal sell points for all your favorite crypto. Comment those coins right now. I will make a list of each one to cover. The major ones will be covered, but if there's some more obscure tokens out there, then make sure to mention those and I'll see if they're worth covering. And without needing to be said, but I'll still say it anyway, if you are somehow not subscribed to this channel and want to risk missing that content and much more, then by all means that's on you. But let's now get into it. So why do I say selling in the bull is harder than buying in the bear? One glance of this image should tell you everything you need to know. During the bear we spent 2 years flatlining like this. Pick your spot by wherever, it literally doesn't matter. And a side note, can you believe that small deviations during this horizontal line are enough to leave people sidelined for the entire bull? But that's a separate discussion. But then we have the peak of the bull, and we get this moment here, the moment you and I, and every single person in crypto want to sell at. But it's literally impossible, and I must admit this whole idea makes me very nervous. Of everything, this is the one thing that has always got to me. How can I ensure that I sell in this zone here that, as you all know, can last for even just a couple minutes? This is exactly why I've developed theories and strategies over the years to help me out. I will now be showing all of them to you this video. We'll start with existing projects, so projects that have already undergone their first cycle and have been here for a while. Let's use Gala Games as an example. So Gala currently sits at about 2.5 cents, and has a previous all-time high of 74 cents. Now the absolute beginner way to approach this is by saying 74 cents is the previous high, and if I buy right now at 2.5 cents, then I'm about a 30x away from highs, and so I should invest based on that. Please don't do any of what was just stated, and I'm assuming all of you watching should be at a level where you'd understand why. If you don't see what's wrong with this, then I will explain why. But perhaps you should first watch some other channels and learn basic crypto investing models, and then come back here, because from here on out it gets a little more advanced. First, the idea is, since Gala Games made this high and went through a 2-year bear market, the vesting token unlocks means the supply of Gala has become more diluted than what it was at this 74-cent high. At that high, Gala had a market cap of 5.2 billion, but if you look at the current market cap, it's 690 million, which is a 7.5x away from the 5.2, and yet as stated price is still a 30x away from 74 cents. What this means is so many tokens have been unlocked during this time that Gala Games now needs a market cap of over 20 billion just to get to its previous high of 74 cents. Now whether you think that's possible is a totally separate discussion, but to summarize, for Gala to match its previous all-time high in price, it needs to 4x its previous all-time high market cap. This isn't just the case for Gala, but for every single other crypto that's already had its first cycle. I highly recommend for you to go check the crypto you hold and see if there's this discrepancy in market cap over the cycles. You may be surprised. With the market cap side of things out the way, and how, for example, crypto like Gala and Filecoin or the Graph or ICP won't get to its previous highs because of it, what next? This next thing I'm about to teach you is game-changing. It's absolutely everything. But I can't take credit. I learned this from a guy by the name of Cotton Candy TA. I will leave a link to his channel in the description. How some big crypto company hasn't picked him up as a trader or TA guy is beyond me. If you want to take trading seriously and learn everything there is, this is your guy, and this is coming from me. What we'll be talking about here goes by the name hold levels. It's quite easy to understand as far as how to do it. You'll pick it up quite quick here. Why it works is a different discussion. I honestly still don't quite know why, but it really doesn't matter. Let's switch it up to H bar, which is about a 7x away from its highs at 57 cents. Now this whole hold level thing will mostly help with coins you don't think will make new highs, as it marks a prime spot to exit the position. But a chart like Solana's hold levels will still help a lot, but for the most part we assume Sol will make new highs, so we'll be applying different strategies to those coins. But for charts like an H-bar where we're not exactly banking on new highs, hold levels will be your best friend. Start on the 6-month chart and have your horizontal ray and magnet ready. There's two types of hold levels: the resistance and support hold levels. We'll be looking at resistance hold levels as these will mark tops. Put the simplest way possible, mark the wick and close of the accumulation candle, in other words green candle, that has not been tested. So for H-bar that'd be this wick on this green candle right here, and its closed body here. Literally that is it. These are the hold levels of the H-bar chart. Don't believe me? Well, let's look at its support hold levels down here. This red candle that has not been tested. We marked out its wick and body, and H-bar has literally bottomed on that body support to the absolute T, which it's now up 200% from. Going back to our resistance hold levels, we aren't just going to stop here, although you technically could. What we'll do next is go down to the next smallest time frame from the 6-month, which is the 3-month, and then again mark out the wick and body of the accumulation candle furthest away from price action. In the scenario, the hold levels actually pretty much stay exactly the same, so nothing to add here. We'll now go down to the next smallest time frame, being the monthly. Now pay attention. First, this candle here at around 20 cents will mark out. The wick is a tad bit lower than this previous one, but that's okay if they mesh up like this. And then the body of this candle being right here. Now before we go down to the next time frame, notice this candle up here. We will also be adding hold levels to these candles, but before we do, I want you to focus in on this wick here. Now, even though this is a red candle, what you'll notice is when this candle opened it would have had to have been green, because that's the only reason we can have this wick. But it's the body of this accumulation green candle where it rejected before inversing and becoming a negative 23% distribution candle. So this has already been tested at smaller time frames, but regardless, for this 1-month time frame we'll still add the hold levels being here and here. Same process, we'll now go down to the weekly and mark out this wick here because it has not yet been tested, and then the close of the body. And then same thing up here, this wick and the close of the body. If we go down to the daily, once more we mark this wick and its body. Now look over here for a second. You may be wondering, why are we not marking out this hold candle with its wick and body? Well, that's the thing, these hold levels were once marked, but what happened was price action came up to those levels and rejected off of it, meaning these candles have already been tested, they've already been cleared. The reason I give so much emphasis to this daily candle in specific is because it's what falls within our higher time frame hold levels. Now if we go up to these hold levels, you'll notice there's no daily candles to mark out as they've all already been tested. For example, this one here got tested here, so it's done. This one got tested here, this one got tested here, and so did this, and so did this. This makes sense because, as we originally said, in this monthly time frame this wick rejection means it got tested in the lower time frame. And now looking at this in the monthly, I assume H-bar tops either here at around 23 cents or up here at 32 cents. If not, and H-bar goes on to make new highs, I still assume it faces heavy rejections from these areas. Now you may be a bit confused with everything I just said. You're probably saying it seems simple, but what exactly is going on? Like I said, I don't know, but the power of these hold levels are unparalleled. They will change how you approach investing. It works on all time frames. I'll run you through a bunch of examples, and then I highly recommend for you to pause this video and go spend like 10-20 minutes trying this out. Look at this Sol chart on the weekly, starting from its top. 2 hold levels here, tested, rejection and downtrend. Got this hold level here, perfect rejection on the wick, and we go down. And then this hold level, which we tested just 2 months ago, still held. Although the rejection was small considering we're in a bullish uptrend, it still served as some form of rejection. Look at this hold level down here, a test and dump. This hold level here, a test and dump. Now look in this vicious uptrend, a clean support, hold level and pump. Look at Link. I remember a while back telling you guys how I was able to buy Link on this wick here. Such a weird statement, right? It's super convenient. He has to be lying. Well, no, Link just found support on its untapped support level from back in 2020 and decided that was the bottom before a 4x move up from $5 to $20. Here's Near Protocol. You think it's a coincidence that Near bottomed on its lowest hold level possible before reversing up. This is exactly what we're trying to do now, but toward the upside, trying to find tops. Allow me to show you examples from old cycles to prove this. Our beloved XRP did not make a new high in 2021. Guess what the top was? This hold level left from 2018 on the absolute nose. Same thing with Dash, no new high, but look where we topped. Another hold level. Same thing with NEM. This chart we literally cannot make up. I feel this hold level strategy will help you significantly more this upcoming bull market, due to the sheer amount of altcoins we have this time around that have already been around for their first cycle. Also, hold levels are something you can use in general with your normal trading, as this stuff works even in the 1, 5, 15-minute charts. I want to make a separate hold level video because it does get more detailed. There's specific tips and tricks I picked up while using this over time, so be on the lookout for that. Again, if you're not subscribed, you're missing out. With market caps and hold levels out the way, what about new tokens that need to undergo their first cycle, or older tokens that clear highs and make new ones? All I have to say about that is price discovery, one of the first topics I discussed on this channel. Everyone is screaming bullish as of late on crypto Twitter and YouTube. Sure, it's bullish, I'm happy, but we're far from the disgusting rips yet to come. Look at this BNB chart. When this starts happening, no one knows what to do. You start printing so much money it no joke starts getting scary. All I can say about these violent thrusts upward are, first, look at the valuation. Is the market cap fair during that specific moment you check? And perhaps most importantly, once you've made a certain return like a 10, 20, 30x, whatever it is, just get out of the position, especially if you're someone looking to enter the domain of having size for future cycles. Because, ladies and gentlemen, let me say this, possibly the best advice I can give when it comes to selling is to pre-pick the levels you want to sell at. In fact, I'd say that pre-picking the levels could be the single most important thing in crypto investing, because from a top-down approach, what would come after that is the decision of when you buy. So if you want a 15x investment on an asset like Solana, where you pre-decide the level to sell at is its previous all-time high of 260, then you know once SOL hits 17 you buy no matter what noise is occurring at the time of being 17 and below. And once it gets to highs you get out, that's it, end of story. It's also incredible at taking off the stress from selling, because the reality is you won't nail this top, not even closely. There's no such thing as selling the top or selling on the way down. There's only taking profits, that's it. For example, once Link hits 80 I'm out. I'm literally out. I don't care about anything anyone says. I've been in this game too long to have the opinions of who's who to dictate what I do. I'm taking my bag and I'm getting out. Thank you for playing. See you next cycle. That's the killer approach you must have. I will make videos on all these crypto and give specific targets and why, applying all the logic stated in the video and more. Make sure you're subbed. Start planning all of this out right now. To buy or trade crypto with cheap fees and big bonuses, sign up to an exchange link in the description. And I'll see you all very soon.